Okay, fam, welcome back. So today we're going to be going over how to make $100 a day swing trading. So with that being said, let's get it. Okay, so first off, I want to go over a few things here. Okay, so this was requested, so I'm going to go ahead and do this for y'all. So there is a couple of things you need to know before getting started with this. And again, just understand if you're putting your money into these swing trades, it's always a good idea to use a stop loss. Personally, we don't use stop losses, but there are reasons for that because the setup that we have is a very high probability success trades. So most of the trades that we take do usually end up in profit. Ultimately, it's like a 85 to 90% win ratio, somewhere in there, 80 to 90% somewhere in there. Depends on the situation, whether the stock immediately rockets or basically goes sideways or drops. On occasion, it does drop, but it's pretty rare. So that's one of the first things. The other thing you need to know is the kind of stocks that you want to do this on are more volatile stocks. So dividend stocks are not really ideal for this. You can do them on dividend stocks. It's possible, but the trades themselves may take a little bit longer to play out. I'll give you guys an example here of something that would have taken a long time to play out. For example, Palantir. So this one does have opportunities to show up on the 4-hour chart. You can see this golden cross back here. If we go back in time, right around the time of earnings, that would have been a great time to get in. But before this, you can see that it really didn't do much. I mean, you get your golden cross here. I'll talk about this in a minute, but you can see the move. I mean, it was substantial, but and I suppose you probably could do this on dividend stocks, but me personally, I prefer to do this on low cap, basically low cap volatile stocks or extremely volatile stocks like Tesla, Nvidia, small cap, low float things like some of these that we have in the watch list here. The Bitcoin miners are also another good one to do swing trades on because they're pretty volatile. So, in my opinion, of course, everybody's entitled to their own opinion. In my opinion, I think the best stocks to do swing trades on would be extremely volatile ones like Tesla and Nvidia and things like that. Coinbase is another good one. The Bitcoin miners and a lot of small cap, kind of low float stocks like maybe the ARK ETF, this one right here, WHF. Trying to think of some others I can give you guys. So stocks like Snowflake, tech-based stocks, or AI stocks, like some AI stocks like Serve, SoundHound, NVIDIA, AMD. Some of these kind of stocks are really good for swing trading. Others like Beam. Another one that we traded was ChargePoint. Did some of the miners, things like APLD, ALT, Veritone. So there's a lot on this list. And again, when it comes to swing trading, we do this on the 4-hour time frame. So we always like to have a large selection of stocks that we can choose from. Some people use stock screeners to kind of set up their watch list in accordance for these things. A lot of day traders will use stock screeners that actually trade actual stocks. We don't trade stocks, we trade futures because there's a lot less limitations to trading futures than there is stocks, which is good because we don't want to have to deal with stuff like PDT and uptick and all that kind of stuff. If you guys are day traders in stocks, you know what I'm talking about here. So yeah, that's the other thing, the kind of stocks that you want to take a look at. Again, it is a good idea to have a large watch list of stocks because if you're using the time frame that we use, which is the 4-hour time frame. Some people use the daily and the weekly. We do use that in confluence with the 4-hourly. We'll get into that more in a minute. It's just a good idea to have a large selection of different stocks to look at because, again, we're trading stocks here. With futures, you can literally – there's people that make a living that literally just trade one contract in futures. Like they literally just trade the S&P or they literally just trade the NASDAQ. That's all they do. Okay, they just trade one individual futures contract. That's all they do. They don't have to look through stock screeners and stuff like that. Again, futures and stocks are very different. So yeah, good idea to have a large watch list, the type of stocks that generally you want to look for. So now let's talk about the amount of capital you would need initially to do this. So here's kind of what I aim for. Okay. So I'm looking for about a 15% return on the money invested in any given trade. Okay. And what I'll usually do is I'll usually split these into 4 separate trades. Now, all these trades don't necessarily have to be put on at once. Again, we're looking for the entry signal here. So they may begin and end, and likely will begin and end probably at different times. But kind of the thesis here is we want to know what the initial investment is, the total capital required for uh, looking for that $100 a day, and then kind of split that into 4 trades accordingly. And again, the reason for the 4 trades is because if you have 4 trades instead of 1 trade, with 4 trades, you have a 25% diversity versus, like, let's say you lose 100% of your money on 1 trade, but you have 4 trades. Okay. So you win 3 of those, but you lose. Well, I mean, obviously, this is where the stop loss comes in. Let's say you lose 15% on 1 trade, but you win 15% on the other 3. Okay. If you have $3,000 and you win 3 of those 4 trades, and again, do the math for yourself, you're going to make $450 on 3 trades, but you'll only lose $150 on 1. And this is why this is important to understand. If you do a swing trade on with all of your capital on 1 position, and again, this is probably people that do single stock swing trades, like only 1 position with large capital, they're very experienced traders. They've been doing it for a very long time and they're very good at it. They're very good at managing risk. So this is, doing the single stock swing trade, you can do it, but it's something kind of more for seasoned traders, so to speak. But again, if you put let's say a $3,000 swing trade on for 1 stock and you lose 15%, well, you just lost $600. Okay. Whereas if you had put on 4 trades, 3 of those trades were 15% in profit. 1 of them was 15% in a loss. You would still be positive $450. So you can see there's a massive difference in capital there. Okay. The idea behind having the initial capital is to grow it over time, to compound it, exponentiate it, not to lose money. Okay, that's the idea here. All right, so I'm going to start with you guys with the initial capital and kind of split this up and show you how this works. So I would basically take, and again, this is just me, you can do what you want, but I'm kind of giving you guys a foundation to work off of here. If you choose to do it this way, there are other strategies. You can do your own research if you want something different. So I would basically just take 3,000, let's say the initial starting capital divided by 4, so 750 would go into each trade. If you have a bigger account, you could always start with 4,000 and say, well, I have more money, I want to start with more. Then you could do 4,000 and do $1,000 per trade. Okay, so every 15% gain you make on each trade would be $150. And then you could just reinvest the money back into, like, let's say you win all 4 of your trades on 4,000, then you add 600 to the pot because it's 15% of each trade is about 150. Then you would have 4,600 to work with, and then you could just divide this into 4 again, put that amount of capital into each trade, and just keep on kind of compounding it over time. But let's just say this is kind of the beginner amount here, so 750 into each trade. We're looking for 15% profit on each trade. So each trade should produce roughly about $112 in profit. And again, I'm going to show you guys how this works. So if the total capital invested here is 3,000, and the idea is we're making basically 0.15% on the entire amount invested here. Okay, even though this is split into 4 trades, then in theory we should make $450, right? So $450 is pretty close to about $100 a day if you're talking like Monday through Friday, not on the weekends. Again, if you're looking to make $100 a day, 30 days a week, adjust your numbers accordingly. But $500 a week is a lot for a lot of people. So again, if I were just to do this math a different way, let's just say 3,000 divided by 4 trades. Each trade should produce roughly about 15%. So that's $112 per trade times 4 trades. You can see the numbers come out to essentially the same thing here. Okay, so that's the initial capital, how, like, the percentages I would be looking at per trade, the kind of stocks that would be needed, and the importance of having a watch list. Again, if you don't have a watch list to work with, you can always use a stock screener on the platform that you use. And again, I'm pretty familiar with TD Ameritrade, so I know how to use the Thinkorswim for the stock screening and day trading and futures and all that. That's actually what we used to use before we went to TradingView. But you would have to learn how to use a stock screener on whatever platform you use to kind of filter through stocks and look at ones that look at things like the total volume traded on a daily basis, um, the price movements of the stock, kind of like use Yahoo Finance, for example, to kind of figure out the different financials of a stock, understand what the stock is about, what the company represents, whether it's tech, whether it's utilities, whether it's like social media or, you know, some kind of service or product. It depends on what sector of the market, but you could do all that with a stock screener and something like Yahoo Finance to kind of get a feel for what you're getting into and use that to develop your watch list. All right, so I'm going to go over some examples of swing trades here and how I would do this. Again, you guys can you can kind of use this as a base to develop on if that's something you're interested in. So pretty much how I would start out this is I would start out on the weekly time frame, okay? I don't know where the actual chart went here. So what I would do is I would start out on the weekly time frame and I would take a look at this and I would say, okay, where is my major levels of support and resistance? I would do this on the weekly time frame, okay? Where are the trend lines? I would draw those in. So you got support here, flip zone, and then you have resistance, which is now a flip zone. I would draw in the different trend lines of major levels I think this could bounce off of or get rejected off of. I would go down to the daily time frame and I would say, okay, which level are we looking at here? So in this case, we'd kind of be looking for this trend line or the EMAs. You can see the EMAs are very spread out. So this move has already taken place. It's a little late to get in here. If you wanted a longer trade, you could use the daily, for example, and just kind of ride the EMAs up. That would be a longer trade. If you're willing to hold it that long, move your stop up accordingly. But in this case, we're trying to grow the account, so I would not want to hold these for a very long time. I'd want to make that 15% and get out. So you can see here that the EMAs basically had the golden cross. So in this case, we would have made roughly about 25% in 15 days. Again, if I do the numbers here, each trade, we're only looking for 15%, okay? But if this trade made 25%, well, hey, great. We made another roughly about $60 on that trade. That's better, right? It grows the account faster. So in terms of the tools that we use here on the actual charts, I do want to go over that. So we have the base, kind of the base, whatever they give you for the RSI, we have the base version of that. We have the base version, base settings of the MACD. And we also have the EMAs, okay? So we have the 51 EMA. The 51 EMA is more for futures. It's not so much for stocks. So I'm actually going to remove it for this video. The main EMAs that we use here is the 9 EMA, which again is the blue one, and the yellow EMA is the yellow one. You can make this whatever color you want. What I'm looking for here is a golden cross. Basically, that is the smaller time frame EMA to cross above the higher time frame EMA. So I want to see the 9, the blue EMA, cross above the golden. As soon as I see that, that is my signal to get into the trade, okay? If I don't see this golden cross, I look at another stock to see if I can find one. If not, then I wait for a setup among my watch list of stocks. And then as soon as I see the trigger, I take the trade, okay? So basically what it took in the trade back here on August 7th, guess what happens? In roughly about 2-3 weeks time, make 25%. And based on the support and resistance here in the trend lines, what I would do is I would kind of put my stop, let's say maybe I'd put my stop somewhere below the EMAs and below resistance and below the previous candle low, okay? So this red candle right here is sitting on this white trend line. So I would put my stop below this white trend line, which is, again, below the EMAs, below the resistance zone. If I was going to use the stop, that's how I would do that. So the risk here is I'm risking 4% of my account, or 4% of that trade, okay, if I was going to use the stop. Whereas the reward here potentially is 25%. And again, you can always move your stop up accordingly over time as long as the trend is bullish, higher highs, higher lows. But if I had held this trade all the way through, I would have made 25% on my account. Okay, if I was going to use the stop. Whereas the reward here potentially is 25%. And again, you can always move your stop up accordingly over time as long as the trend is bullish, higher highs, higher lows. But if I had held this trade all the way through, I mean, you can see how ridiculous this would have been. This would have been a 50% gain. Again, a 50% gain on $750 is a lot of money. So that is basically 3 swing trades in one. That's $375 profit. Okay. So I'm going to show you guys another example of this. All right, so you can see that on Riot, which we have some call debit spreads on for different reasons. Again, this is swing trading. This is not options. So you can see we got the golden cross here. I would have took this trade on October 3rd. It would already be up basically about 6% at this point. Again, usually these trades to get 15% takes a little while to play out. And I would have put my stop below the previous swing low here. So that's pretty much how I would have done this in terms of swing trade. Again, we don't usually use stops for this strategy because it's extremely high probability, but risking 6% to make 15 is a pretty good risk reward. If I go back on time on Riot, you can see the last golden cross signal we had was back here. What happened? This thing absolutely exploded to the upside. Again, it did not take long to play out. It was a 35% gain. So again, much, much greater than 15%. The amount of time this took was extremely small. So it was only 5 days. All right, so I'm going to use another example of a different kind of stock that we can look at that you can see we just recently had a golden cross on this one, as a matter of fact, on the 4-hour time frame. And again, the 4-hour time frame is what we use for the trigger. In not even 2 days, this thing has already gone up 15%. Okay. So last time we got this, it took roughly about 7 days, played out for a 30% profit. Again, if I go back even further in time, you can see back here in August, this played out for a 62% profit and only took 3 days. This one was kind of a fake out. Well, actually, that wasn't even a golden cross, so never mind that. Yeah, kind of just ignore what I said there. But you can go back in time here and we take a look at basically back in July, 29% over the course of 8 days. So I can go over to, let's say, another different stock to look at this to kind of get a gauge of what we're looking at here. So in this particular case, for DraftKings, you can see the RSI already got the golden cross on the 4-hour time frame. MACD is about ready to get the cross, and the EMAs are about ready to get a golden cross. In this instance, if I had the money available and all 4 of my trades were not taken up, I would take a look at this and say, okay, this setup looks pretty good to me. So what I want to do, and again, you can see a break of the trend line. EMA is curling up. We had a nice little gap up here, basically a hammer candle, and then the price went up. So I would say, okay, I'm looking for the EMAs to cross here. So I would watch this the next couple of days. As soon as I get the trigger, I would do the same thing I just showed you guys before. Okay. I'd take the trade and put the stop basically below the previous swing low or a previous kind of trend line or support area, resistance, whatever, kind of as the safety basically to ensure I don't get stopped out, but also to protect the trade, so to speak. So last golden cross here, you can kind of see what happened. Took 20 days to play out, but still made 20%. Okay, so going back a little bit further here, you can see this last golden cross right here. So the maximum move here was not quite 15%, but again, if you had held longer, it would have actually been more. So 10 days, 10% move. Again, you kind of have these period of fake outs right here. You can see this one right here. So this one went up a little bit, but then it kind of sold off and dumped. So again, this is a reason why you may want to consider using a stop when doing swing trading. So again, you get the golden cross here, moves up, boom, 18% in 11 days. All right, so I'm going to show you guys that this can actually work with just about any particular stock you're looking at. So I'm going to go take a look at a big tech stock, okay? Something like NVIDIA. All right, so going a little bit forward here in time, you can see we just recently got a golden cross back here. So this one was kind of a little janky, would not have been my ideal trade, but you guys can see over the course of roughly about 14 days, it had gone up 12%. And again, we have not seen the price create a death cross or get below these previous swing lows here, so that matters. But yeah, I mean, basically I would have put my stop right. Well, actually, no. So I would have, in this case, because the price had already lifted far above the EMAs, I would have waited for a pullback into the EMAs. And then as soon as the price moved up, I would have put my stop below the previous swing low, which was this one right here. And then I would have let it ride or stop me out. But if I go back even further in time here, you can see that we got the golden cross here. Okay, this kind of had already lifted a little bit, but I probably would have taken it anyways. Because again, you have a little gap up there. That's usually a bullish sign. So basically 14% trade here. And it only took about 6 days to play out. So that's pretty good. You kind of got some falsehoods here, or fake ones, fake outs here. Again, that's good reason to consider using a stop. And I've already showed you guys how to do that. So you can see the golden cross back here. This was actually a much better setup. This trade took about 49 days to play out, but it was a 65% move. So again, you would have, you literally would have made all 4 of your trades in one trade right there. So if I go over to something like, I'll just pick a random stock. You know what? I'll pick a dividend growth stock, for example, actually, just to kind of give you guys an example of just how effective this is. Okay, so this one's going to be a little funky. And again, this is the reason why we pick more low cap or big tech stocks to do this. But you can see you get about a 3% gain here. And again, this is part of the reason why I don't choose dividend paying stocks, typically speaking. But here's a good example of a decent trade. So 10% over the course of 19 days on PepsiCo. And if I go back even further in time here, you can see there's another golden cross right here in April. And these ones are much more rare. So a lot of people like to do options on this instead. I totally agree. I totally agree with that, doing covered calls or cash secured puts and or just investing for the passive income. So 8% over the course of 29 days. Give you guys another example of maybe another stock that we held previously that probably is actually a good one that pays dividends. So Zim. So you get your golden cross back here, kind of on that retest of the EMAs, or you could have just got in right away, either one. So let me actually measure this a little bit more accurately. So roughly about 46% over the course of 17 days. I would have basically put my stop probably right down here, below these lows here. And again, I mean, it's kind of a big risk. I mean, I probably would have actually set my stop at maybe like half of the profit. So if the profit expected is 15%, I would have said, okay, I'm not going to risk any more than maybe like 7 or 8%. Again, when you're trading, you always want to have at least 2-to-1 risk, preferably 3-to-1 risk if you can get it, but 2-to-1 risk at a minimum, which again, basically what that means is basically you would be at break even. If you took 3 trades, you lost 2 of them, but you won 1 of them, you would be at break even every single time. Okay. If you won 2 trades and you only lost 1, you would make a lot of money. That's basically what that means. So you really only have to win about 66% of the time to make money. And if you lost 1/3 of the time, you would be at break even. That's what that means. So 25% or 23% move here over the course of 11 days. If I go back even further, this one was actually a huge move. This was massive. So maximum move here was 128% over the course of 44 days. Again, you can just kind of scale your stop up below these swing lows when you see them to basically lock in profits on the way up. So yeah, anyways, this is how you guys could potentially make $100 a day swing trading. Hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.